Can I invite Grant Thornton to present their report, please?
Thank you, Chair. Hello, good evening, everyone. It's Richard Purcell here. I'm the engagement lead from Grant Thornton. So we've got the full team here tonight. We've got Dave Rowley, who's the audit manager, and Siobhan Barnard, who's the lead auditor. So normally in these circumstances, I get accused of stealing all the best lines and stealing their thunder. So what I'm going to do is hand over to them. Siobhan's going to say a little bit about what it's been like this year, because I'm sure you appreciate it's been a pretty different year for everybody involved in the audit. Dave's going to talk you through the accounts audit, and then I'll say a few words at the end about value for money. So without further ado, I'll hand over to Siobhan.
Thanks, Richard. Yeah, so just as a kind of brief background, because I'm sure you've heard this bit before, but so we completed the interim audit between January and March, which was entirely on site, so that was unaffected by lockdown. And that meant that we could do all of our walkthrough and our controls-based elements of the audit then, which was quite important, meaning that we could actually undertake the majority of the audit work remotely with no problem. So the accounts were provided to us with the majority of the working papers on the 8th of June. I think it's worth noting here that that was actually in line with the original timescales that we'd agreed before COVID became an issue, which is a big achievement for the finance team. So although there were some areas where we had amendments that were needing to be made, which Dave will run through with you, the accounts and the working papers were of a good standard, which was particularly important this year with it being conducted remotely. So the whole audit from June and July onwards was remote from both sides. So the way we managed this was with regular Teams meetings with a variety of different personnel from both sides. And then the usual email and phone communication had to substitute in for the in-person day-to-day review of working papers. The finance team were always available when we needed them, which was very helpful, because so that ensured we could deliver the majority of the audit during the main visit in June without delays. There were a couple of areas, I think especially where physical documentation was required, where we had slight delays due to the remote working, but that didn't cause any longer term issues because we were provided with all of the information that we needed kind of through the audit by the end of it. And I know that the finance team did try very hard in a lot of cases to get this information to us, so that was really helpful as well. I think overall for this audit there wasn't really too much difference to usual apart from the physical location to how we could run the audit, which is a big testament to the finance team. So I think we'd especially like to thank Pauline, Ed and Simon for their cooperation with this and for making sure that we were able to deliver this to a slightly amended but not too far from usual time frame, which was very helpful. So I'll just pass over to Dave for the accounts element, if that's okay.
Thank you, Siobhan. As Siobhan and Richard mentioned, I'm now just going to talk you through some of the more detailed elements of the report, and then I'll ask Richard to just talk about value for money and the going concern elements. So we can just begin on page 5 of our report. So that's the section entitled Audit Approach. I think the discussion that Siobhan's just had with you around working arrangements about COVID-19 has probably adequately kind of set the scene as one of the key things that impacted our audit approach. Obviously, we were required to work remotely. There were some additional requirements on looking at information prepared by the entity, thinking about some of the governance arrangements and looking at some of the controls in place in that area, but also some additional work required as a result of this, looking at financial sustainability of the organisation going forward and impacting on our value for money assessment. I think the key point to bring out here, well, the first one on this slide at the foot of page 5 is just kind of almost a housekeeping point, really. You'll hear auditors refer to materiality. It's one of the key concepts that we talk about as part of our external audit, being the assessment of whether or not there is possibility or whether there is an actual material misstatement in the financial statements. So the materiality that we've been working to is at the head of that table at the bottom of that page. So that's 6.6 million for the council's financial statements and 6.7 million for the group financial statements. Just to clarify a couple of the other points of terminology here, performance materiality is something that we use as auditors to drive our testing. So that recognises that there's a possibility there could be a number of slightly below material issues which may culminate in a cumulative material issue. So we set a performance materiality which is usually a fraction of headline materiality. So we've gone with 75%. And then we talk about clearly trivial matters in that third line. Trivial is a benchmark, a threshold that we set. Anything below that value we would deem to be not relevant or not significant enough to report to the committee. Any issues that we found above that area we would report to you, but we wouldn't necessarily request an adjustment. And then anything above our headline materiality we would require the council to adjust before we were able to provide an opinion. And then just to clarify on the final line there, we talk about materiality for senior officer remuneration. We will occasionally deem certain areas of the accounts to be particularly sensitive, and we'll set a specific lower level of materiality for those areas of the accounts or those disclosures. And we deem the disclosures around senior management remuneration to be that type of disclosure that's particularly of interest to users of the accounts, and therefore we set a lower level of materiality as we set out in that table. The other point that I'll bring out here is on page 5. We refer to just some outstanding items. If I can just flag up, obviously we prepare this sometime before the committee meeting, so this was circulated around a week ahead of the committee meeting, so we have obviously been working on this since that point. If I can just flag up, I think the key one to bring to your attention is the receipt and consideration of the Shropshire Pension Fund Auditors IAS 19 report. We are still awaiting that. We are hoping that should be available shortly, but we will need to receive that before we can provide any assurances, any sort of final assurances. I think the other key one to flag up here is I think there is still a couple of things to iron out on the investment properties point, the second line there. I won't go into too much detail, but I know Siobhan has a good grip on the details there, so we'll be able to provide some further information if required. So moving on, page 6 is where we outline the significant audit risks. So what we've identified to be the significant risks of a material misstatement. So the first page there, page 6 of our report, talks about the first section talks about COVID-19. I think Siobhan has given a good outline of some of the additional work or some of the additional considerations that we had to take into account as a result of COVID-19. And Richard will be able to talk you through some of the work that we've done on VFM and going concern later on in the presentation. At the foot of that tab, you'll also see we refer to improper revenue recognition. This risk, along with the one at the head of page 7, management override of controls, these are the assumed risks of material misstatement. So you'll see those in any set of accounts, and similarly any audit findings reports. The auditing standards require us to assume those. Improper revenue recognition, as you may have seen in previous years and you might be familiar with from other public sector organisations, is something that's perhaps a bit more relevant to a private sector entity. So we are able to rebut that risk in respect of the authority as a result of the robust control environment, but also the same incentives perhaps don't exist to overstate revenue as they do in a private sector organisation, examples being performance related pay or submissions to stock markets or other similar releases. Management override controls is slightly different. This is something we would always assume to be present in any entity. What this is getting at fundamentally is the possibility that management could use journal entries or similar manual entries to the general ledger in order to manipulate or manage performance. Areas that might be particularly susceptible to this, in addition to just a general overview of the control environment around journal entries, would also be the significant estimates. So clearly, things such as valuations, estimates around pensions liability would also be an area where there's a possibility of management bias, and we do some detailed work on those, which we'll talk about later in the report. But also we look at areas such as accruals and other estimated entries. And ultimately the headline news there for management overrider controls is we have performed a very detailed review of those areas, as well as looking at the journal's control environment, and we don't have any issues that we wanted to bring up to the committee. The next two risks that we then talk about in this section at the foot of page 7 and and on page 8 are where we've performed. These are more entity specific risks, so this is in relation to our specific risk assessment of Telford and Wrekin Council. One of which is valuation of land and buildings, and the other is valuation of the pension fund net liability. Possibly no surprise to those of you on the committee that are familiar with these from previous years. These are two of the two largest estimates and two of the largest balances on the accounts, on the balance sheet. So clearly very susceptible, or there's a possibility of material misstatement in those, given the complexity of some of the estimates involved and the size of some of the numbers. So we set out on pages 7 and 8 the work that we've done in order to get assurance over those balances, which principally relates to assessing the work. In both cases, the council will bring in an expert in order to prepare those estimates for them. In the case of valuation, there's an internal valuer that is part of the authority, but is an independent part of the authority who produces those valuations. And in respect of the pension fund liability, the council it engages an actuary, external actuary, to prepare that estimate. And what we would do in both of those instances is look at some of the inputs to that estimate. So in the case of land and buildings, we're looking at the information that was provided to the valuer, doing some testing on individual valuations, ensuring that the correct inputs were used in those calculations. Similarly, for the pension fund liability, we would, amongst other procedures, write off to the auditors of Shropshire County Pension Fund and make sure that information in relation to the members of the pension fund who are related are either retirees or active employees of the authority, but just making sure that that information has been passed over correctly. And we'd also ask them for some assurances around the valuations of assets in the scheme. And similarly, we would also perform a review of the methodology adopted by those experts against industry standards. In both cases, we're happy to say that we don't have any particular issues that we want to draw out. What I will flag up is there are a couple of adjusted entries based on our audit procedures. I think what we're effectively saying here on page 7 and 8 is that we're happy with the finished product. None of the issues that we found were fundamentally material, and again, we're happy that those were, in the case of the PPE issue, was really down to a clerical point, and then on pension fund liability just had a slightly unusual ongoing issue, which I'll bring out later on, but which I think fundamentally is not a reflection on the control environment. It's just something that needed to be adjusted out, but we'll talk about those as I go through the report. Page 9, we are required by the auditing standards to talk to you about the group audits. Obviously, we are not the auditors of the council subsidiary New Place, but we will look at the work that has been done by their auditors. There's some additional complexities to this, really, given the kind of ongoing uncertainty in the property markets. So we did do some additional procedures ourselves to just gain full assurance over the valuation of those, the quite significant value of properties that are included in New Place's accounts, which get it consolidated in to the group financial statements. There was an adjusting entry which came out of that work, really fundamentally a classification issue rather than anything that would impact the financial performance of the authority, stemming from the different reporting frameworks which are used by the authority and its subsidiary. again, I'll provide a little bit more detail on that later on in the report. One thing that we will also just need to flag up here, as you'll have seen, we've referred to at the foot of page 7, we talk about an emphasis of matter. So what this is referring to is something that will feature in our audit opinion, our audit report. It's not a qualification, and it's not us saying that there's an error in the authority's accounts. It's just quite literally what it says. Really, it's designed to emphasise a matter that we think is of particular importance for users of the accounts. In this instance, we're talking about the material uncertainty that we believe exists around valuations of property. As at 31st of March, RICS issued a practice alert to practitioners to flag up that there was a possibility of significant uncertainty or greater uncertainty than in previous years in the market. So that is something that will feature in our audit opinion. Again, just to flag up, not a qualification or modification of the opinion, but just something that effectively enhances the user's understanding of the financial statements. I will then just, if we can jump onto pages 11, 12, 11 and 12, we talk about the significant estimates in a little bit more detail. I'm not going to go through, I'm just conscious of the committee's time, so I'm not going to go through these slides in detail, but it might be of interest. We talk about some of the assumptions that we referred to. For example, on page 12, we talk about some of the assumptions that feed that that liability calculation for the LGPS liability, and there's a bit of a benchmarking exercise there. And I think the key point to take into account that you'll see on pages 11 and 12, fundamentally we're happy with the authority's processes for arriving at those key estimates, and we've given a green assessment on those. Page 13, we talk about going concern. We'll push that to the end of the presentation if that's okay, and I'll ask Richard to go through that with you. Richard will talk about that in conjunction with value for money. Pages 14 and 15 are some sections that we're obliged to report to you on by the auditing standards, by the ISO 260, which we're bound to. Nothing sort of really particularly major that I want to draw out from that. I'll just flag up, you'll see that there are some other bits of work that we do in relation to the audit for the council, one of which is in relation to whole of government accounts. Usually we would be looking to, in a normal year, we would be looking to give you an update on where we were with that. As you'll be aware, there's been quite significant disruption to the timetable of audits in the local government sector this year. The overall deadline has obviously been pushed back to November the 30th. As a result of that, we are still outstanding. We've not yet received the group instructions from the NAO, who are the overall auditors of whole of government accounts. So as soon as we get those instructions, we'll be able to undertake those procedures, and we'll be able to report to the committee at a later date. From page 16 onwards, we then get the value for money section, which I'll ask Richard to talk to you about. Page 21, independence and ethics, just to flag up, this is an important part of the audit. We are required to, obviously independence is extremely important to us as your external auditors. We're required to assess our independence on an ongoing basis, make sure that we always have appropriate safeguards in place to remain appropriately independent, and we need to report that to you on an ongoing basis as well. So we're pleased to report on page 21 we remain independent. We don't have any additional independence issues that we want to draw to your attention. As part of that assessment of independence, we're required to assess the level of any what we call non-audit fees, so additional services that we provide for the local authority. These are listed out for you on page 22. That amounts to the certification of teachers' pensions return, which we're just beginning to look at the moment, and then similarly the certification of housing benefit, which will also come up later in the year. Fundamentally, our mitigation of the independence risk here is that these are comparatively low fees compared to the overall audit. And similarly, this is something that you would largely expect the external auditors to perform. It would be quite unusual to go out to a different provider for those. Page 23, again, as part of the auditing standards, we're required to provide an action plan. So any control points that we've flagged up during the year, we make a couple of recommendations around how to improve those going forward. In practice, it's not a major issue, but we did note that there's some declarations of interest were not received in 1920, so we just made a recommendation there to ensure that those are all received ahead of the external audit. And then similarly, Appendix B, which is on page 24, we need to look at any prior year recommendations which were made in our previous AFR for the 2018-19 financial statements. There's one that we note here in relation to creditor and debtor balances. So we did note some challenges in gaining a clean population for sampling of debtors and creditors, which I believe was improved this time around. We were able to sample that more easily this year. And then similarly, there was also an issue that we'd picked up in relation to a VAT debtor. Didn't quite reconcile back to VAT returns. I believe this has now been released into a reserve effectively, so that reconciliation is now works, and then the balance has been released into a reserve pending any sort of contact from the authorities, but that is now a satisfactory resolution from our perspective. And then Appendix C, as referred to earlier on in the report, this just lists the adjustments that were made in the local authority accounts and the group accounts. So if I can just go through these again, I won't go through these in great detail, but if I can just flag up the top line there, various restatements to PPE and investment properties. We did pick up an issue where an entry had been inappropriately processed. It had been posted to the wrong line in one of the entries in relation to revaluation of investment of PPE. But overall, we're satisfied that this is an isolated sort of clerical issue, which doesn't extend to an overall control issue. The revaluation of the pensions net liability referred to there is a slightly unusual entry. You may recall a while back the previous auditors of the council had requested that the council make an adjustment to its pensions liability following the external audit. So they disagreed with the value of the liability that was provided by the actuary at the time. There has since that time been a triennial sort of hard, triennial review as at the 1st of April 2019. So it was appropriate then to reverse out that adjustment in order to effectively reset that and make it match back to the work that the actuary had done. And there's no impact on the actual bottom line financial performance of the authority there. That's effectively just reversing out that change to the estimate. And then there is also one adjustment that we've drawn out to the group accounts. Again, no impact on the bottom line here, so there's no impact on the financial performance of the authority. This is really just a classification change between investment property and PPE, which largely stems from the difference in reporting frameworks. So the subsidiary reports under FRS 102, which has a slightly different definition of what can be included in investment property and PPE than IFRS as interpreted by the Code of Local Authority Code of Practice, which is how Telford Council produces its financial statements and group financial statements. And then finally, on page Appendix D, page 27, we just get an outline of the fees. So there's a reconciliation there at the middle of that page between fees per the financial statements and the fee per the above. And then again, we just reiterate the additional, the non-audit services, teachers' pension return and housing benefit. I'm now going to hand over to Richard just to talk you through the VFM and going concern sections.
Thanks, Dave. Thanks for that. It's all right. I'm getting a bit of echo, so if I sound a bit hesitant, it's just because I'm listening to my own voice coming back. So Dave's given you a pretty thorough run through the accounts audit. I just wanted to say a few words on VFM. Can I just check everybody can hear me okay? Yeah, brilliant, thank you. So as part of the audit, we comment on financial sustainability under our VFM responsibilities, and we're required to talk about going concern, although going concern is effectively a given for local authorities, or has been to a point in time, but increasingly now we're seeing local authorities, due to the pressures that they're under, have certainly uncertain financial outlooks and concerns about the next year or two. So it's been a year like no other for the whole sector, and across the local government sector, financial resilience has been tested to its absolute limit. Looking at Telford Wrekin Council, we've considered three things. We've considered the financial outturn for 1920, how the council has responded to the COVID-19 crisis in financial terms, and the medium-term outlook. So I think the key things that I'd say that are in more detail in our report is, first and foremost, you achieved your budget and you achieved your savings programme for 1920. And if you take that and you take where the council's finances were as you came into 1920, came out in 1920, although nobody could have seen this coming, you were in a strong financial position to deal with these challenges, which is great, and which is clearly very important, and not all local authorities are anywhere near that position. I know that there was an update to Cabinet in July about the impact of COVID-19 that the Section 151 officer presented, and the key pressure points are identified there are what we'd expect to see. So social care costs and the pressures on social care. The loss of income, the loss of fees and charges income in particular, and how that was going to be covered, and the uncertainty about how that was going to work, and the impact on local taxation, in particular collection fund deficits, how they were going to be dealt with, and what collection rates were going to be like, both for business rates and for council tax. So all those pressures are there, all those pressures are real, and all those pressures are still with us. So I suppose looking forward to 2021, I mean, the council's managed well so far, but there are undoubtedly challenges for 2021. Comprehensive spending reviews in progress, so that may or may not be good news. We don't know yet. And there's certainly been additional funding pumped into the sector, which has kept things going and has been fundamental over the summer. I think on the downside, local government funding reform has been delayed again, and that means that the uncertainty that the council faces, as in common with other councils, has been extended. So your financial resilience over the next 2 years is going to continue to be tested, and I think there's three key areas that are going to put stress on the council. The one's budgetary management, the other is central government funding, and the third is the greatest unknown of all, and that's the duration of the pandemic. Now, of those three, there's only one that you can control, and that's your own budgetary management. So you've got a very strong track record in budgetary management, but it's clearly very important that good track record is maintained over the next 18 months or so. That was all I was going to say directly about value for money. I just wanted to very quickly pick up a couple of points from Dave's discussion. Dave mentioned that our opinion would include an emphasis of matter on land and building valuations. Just to put that in context, that's our default position for all our local government audits this year. So that it doesn't mark the council audit out as any different to anybody else's. The other thing, which need to flag to you is Dave also mentioned the IS19 report on the pension fund. So basically, the pension fund auditor has to provide me with assurance about the pension fund audit before I can give my opinion on the council. I'm in the happy position of being the pension fund auditor as well. So it's a sort of, I'm writing letters to myself, telling myself that everything's all right. So that's the good news. I anticipate next week that I will be in a position to release that report, which will clear the way for me to issue the opinion. Now, given a fair wind, that means that Telford Wrekin's council will be the first opinion that I issue in this season's local government opinions, which, as I'm sure members that were on the committee last year will know, last year's was the last that I issued. So I think that reflects and goes back to the points that Siobhan's made about how well the audit's gone and how well, the great support that we've had, good quality accounts, really good support from the team in extremely unusual circumstances. So thank you for that. So that's it for the audit. We're in a good place and we're nearly there. Just finally, just two things I wanted to flag to complete, which I'll talk about in more detail at the next meeting. The one, members may well have seen that the Sir Tony Redmond's review has come out on the local government audit, and really flagged the fragility of the local government audit market and the way that things need to change. I think it's important that as members of the audit committee you get a briefing on that, and I'll bring that to the next committee. The other thing to say is that the Code of Audit Practice, which is our book of rules, has changed from the 1st of April 2020. So what that means is that our value for money requirements change quite significantly for next year. No more value for money conclusion, but much more mandated work, much more detailed work than perhaps we've been doing before, and also a requirement for us to produce an auditor's annual report at the same time as we issue the opinion on the accounts. So I know that's been quite a long session from us. So at this point, I'm going to close, but the whole team's very happy to take any questions members may have, Chair.
Okay, thank you. Thank you all for your presentation. Any comments or questions from the committee? Kuldip Sahota, you were first.
Am I unmuted? Can you hear me?
You're unmuted now, Kuldip.
All right. Thanks very much for that. On page 23, Dave mentioned in the action plan that not all the declaration of interest were received. What kind of a declaration of interest are we talking about? Are they something minor or financial, or councillors claiming their bits and pieces, or what were they?
As part of our audit process, we need to have assurance, be it a private sector or public sector audit, that any relationship, what auditors technically call related parties, any relationship with another body has been declared and considered by the organisation. So, for example, if a member was a director of a company and that company did business with the council, we would expect that to be identified through that declaration of interest process. So the fact that not all the declarations have been received presents some risk, both to us, but more importantly to the council, in terms of, are they satisfied that the council is fully aware of any interest members may have where there may be they may be in a position to influence a transaction between the two bodies.
Okay, thanks, Richard.
Okay, thank you, Kuldip. Bill?
Thank you, Chair. I think I just want to take this time to give my thanks to both the accounting team for getting the accounts out so quickly, so accurately, and providing all the backing documentation for the auditors. So, we're the first ones that, yourselves have actually signed off. So, given that COVID's been going on, they've been having to work and also work in the latter part of the audit away from people, which makes it much harder. And I would certainly, as an old auditor, be certainly thinking, what on earth am I going to tick if there's nothing in front of me? No, I'm joking. So I would just want to put my big thanks on for the finance team and the auditors for getting things done so swiftly. Thank you.
Okay, thank you, Bill. Now, am I right in thinking this report's just for noting? Yeah. Okay, right then, we'll move on. Item 6, audited annual statement. Can I ask Pauline?
Thank you, Chair. Hopefully everyone can hear me. Thank you. Yeah. Okay, so this follows on very nicely from Grant Thornton's report. It's obviously the updated accounts for 1920, and it's presenting them to the committee this evening for approval. As you've heard, Grant Thornton are still finalising one or two parts of their work, so we have included a delegated authority to Ken to make any final changes should any arise following the meeting tonight. Also, as you've heard, the deadlines for publishing the accounts has moved from the 31st of July to the 30th of November, which was part of the coronavirus amendment regulations put through. We circulated to Audit Committee the draft accounts on the 10th of June, and we also made them available for public inspection as required. So we're now presenting for approval, and your committee has delegated authority to actually approve the accounts. Obviously, we're in strange circumstances, so if the committee does approve, which obviously we hope it does, we will send the documents to Nathan following the meeting to get hard copy signatures, which can then be posted on the website and published as appropriate. I have listed in the report at 4.3 the changes we've made to the accounts. You've heard quite a lot of detail from Grant Thornton about these. So they include reclassification of assets, so from assets under construction to investment property. We've had the pension valuation adjustment, the £5 million that Grant Thornton detailed. Revaluation of fixed asset to reduce the risk of material misstatement, and that involved the revaluing of 6 assets during the audit to reduce that risk, and then a couple of other things, including the related party declarations where we've updated as appropriate during the audit. Following approval, we will publish, as I've mentioned, the accounts on the website. We've also got a much shorter document, a summary document that we went through with members who were able to attend the training session prior to the meeting this evening. That's only about 8 or 9 pages compared to the 147 pages. So hopefully that's a little bit more digestible for you. So we'll also publish that as well. I think that's all I wanted to say. Thank you, Chair. So obviously we're happy to take any questions. Obviously the updated accounts are appended to the report which members have had. Thank you.
Okay, thank you, Pauline. Any comments or questions from the committee? No. Okay, we've got 2 recommendations in front of us.
Yeah, can I move the recommendations?
Okay, thank you, Charles.
Second it. Second it.
Okay, all in favour? Show of hands, yep. There's a couple of people who haven't got their camera on. Adrian, if you're against or whatever, please raise your hand or make some.
No, I'm okay.
Okay, thank you. Okay, let's move on. Let's get the agenda back up. Okay, agenda point 7. Rob, are you coming in at this point?
Thank you, Chair. Yes, this is a brief report to the committee just to present information that will be published about councillors who've traded with the local authority in 1920. This information is included as part of the final accounts process. However, it was previously agreed that this report would be separate to that to improve transparency around these matters. As you can see in 5.4, there are 3 councillors who were associated with companies who had received payments from the council. Other than that, Chair, there's probably not much more to say.
Okay, thank you, Rob. Any questions or comments from the committee?
Yeah, Rob, can you hear me?
Yes, Goldip.
Yeah, but one of the councillor you mentioned in there isn't no longer a councillor. Was it really necessary to put that name in there as well?
I think it was because the payment was made within the year that we're reporting on, Goldip. So yeah. It was really about the payment rather than the current status of the councillor. So that's why they're included. As they've now left, they wouldn't be included in any subsequent reports.
Yeah, all right. Thanks for that.
Okay, thank you.
Okay, thank you. Okay, this report's for noting only, so we'll move on. Tracy, are you going to give us an update on the internal audit?
Yes. So it's just to note that the work of internal audit between for the 4th of January and the 11th of September, I just want to really bring your attention to 4.6, which shows the number of reports issued. 21 reports were issued between this period. And I thought I'd give you a bit more of an update on the limited and the poor assurance reports, because we've got a bit more information since this report was published. So the firewall security one, that's been delayed because they were due to have a new system, but due to COVID, the system was delayed. So that's why that hasn't been followed up as yet. But they've now called us in a little bit earlier, so we'll be starting that one shortly. The ice rink, although that now says that it was in progress during when this report was published, it's now been completed, and we're looking at a green report. So they've moved on. Controc, that's also moved on, and that's now a yellow. So that's a reasonable assurance on that one. Section 17 payments, that again has moved on to reasonable assurance again. ICT asset management, again, that's another ICT system that was delayed slightly because they were procuring a new system. So we couldn't really follow that one up until the system had been implemented. And the final one was the place. And again, we've worked with the service area to improve that. That's showing as a reasonable now. So we're due to do another follow-up again in October. So I thought it was important to show that although due to COVID, where staff haven't necessarily been working in those areas, especially things like the place where the building's been closed, they've actually worked very hard to put these improvements in place. So we're sure that the next follow-up things will probably move on to a green. So we're happy with the progress made to date on all of these. That's it from me.
Thank you, Tracy. Any questions or comments from the committee? No. Okay, if I can invite Rob back, agenda point 9.
Thank you, Chair. This is a very brief report that follows on from a report that was presented to Audit Committee in October 19, which details our own self-assessment against the public sector internal audit standards against which the internal audit team have to adhere to. When we did report in October 2019, there were a small number of standards that we didn't fully meet, and therefore an action plan was produced. So this report is really to inform the committee of the progress made in implementing the developments that were required. And as you can see from the table appending the report, that virtually all of the actions have been completed or will definitely be completed by the year end. So it was just to keep committee members updated on that progress.
Okay, thank you, Rob. Any comments or questions from anyone? No. Okay, we'll move on to Rob again.
So sorry, you'll be sick of hearing my voice. I fully appreciate this. This is a verbal update to update the committee on the strategic risk register. We haven't produced a paper on this, mainly due to the fact that the risk management function has now moved. You may remember John Power came to previous meetings to present updates on the strategic risks. The responsibility for risk management now falls under my team. So I will be undertaking this work moving forward. So what we wanted to do really was review the current arrangements and give the strategic risk register a bit of a refresh. So we will be updating committee members at the next audit committee meeting in January as to the status of the risk register. The final part I wanted to add, however, is given the challenging year that we've had that Richard described in terms of COVID, and locally here we've also had severe flooding in a number of parts of Telford, I'd probably suggest that the risk management planning that's previously taken place has held us in good stead, and I think we've managed to cope with both of those challenges very well. And so I would hope that the current arrangements in place are satisfactory, but we should always be looking to develop and move forward.
Okay, thank you, Rob. Any comments or questions to Rob?
No.
No. Okay. Right.
Chair.
Oh, hello.
Hello. I've been advised that the streaming at the start of the meeting didn't actually connect as early as we thought that it had, and items 1 to 4 were not streamed. I'm not concerned about item 1 because that's just apologies for absence, but items 2 through to 4, I think we just need to quickly repeat that so that anybody who is watching on the live stream can see that that has been dealt with appropriately. So Chair, I'm sorry to delay members further, but could we just quickly run back through items 2, 3 and 4 if that's okay?
Of course. Okay, thank you for that. Item agenda point 2, declarations of interest. Anything from anyone?
No.
No. Okay, minutes of previous meeting. Any comments, questions, or in agreement?
Happy to move those, Chair.
Seconded.
Have to agree.
Okay, that's great. Okay, agenda point item 4, external audit letter. This is just to notify the committee that I've got a copy of the letter and I'm going to be signing it after the meeting. Okay, does that conclude everything?
It does. Thank you, Chair. I'm
Fabulous.
grateful,
Right.
and to members.
Okay, thanks for everyone's attendance tonight. Seeing as the next meeting is in January, I wish you all a Merry Christmas and a Happy New Year. We'll speak to you soon. Okay, good night.
Good night.
Good night.
Night, everybody.